Hello guys, welcome to the Trading Parrot. Has Bitcoin just stepped into quicksand? We're going to talk about that. What is kind of the danger that we are facing at the moment? What levels we need to defend? And more importantly, guys, yesterday prior to the FOMC meeting, I entered in a long and I'm currently underwater. So the question is, what am I going to do with my long? What is my risk? Remember, I'm running as well a short, so I am hedging like a pro. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And yes, guys, today we have the Advanced Trade Setups workshop, which is a perk that is only available to my elite members. I asked them last week what they want to do with the last Thursday of the month, and they decided that they got enough of PineScript workshops that they wanted to step a little bit more into manual trading as well. You can join with the link in the description, Elite. Pay a visit to my Patreon shop because there's also a sale currently going on up until today. I think it's until 4 p.m. UK time. I don't remember, but there is a 40% off on Telegram charts and on PineScripts that you can get from 3 months all the way to 1 year, 40% off. Let's have a look at the news. The Fed cuts rates by 25 basis points. We know that, but Powell signals end of red cut cycle. And that, guys, is what we were fearing it could happen. And remember yesterday what I hint in the video, I say Trump clearly state that is very soon that they're going to get rid of Powell. And I smell now the attitude of Trump very quickly, and I know that he said that for a reason. He knew that Powell probably was going to say, he has some insider informer that he was going to say something that was going to spook the markets. In this case, the potential of stopping to cut rates in the next meeting. He said that it's far from certain that he's going to cut it in the next meeting. That's why Powell needed to give this extra confidence. So that is a 3 out of 10 bearish for today, specifically for risk on assets. We got a 6 out of 10 and a 7 out of 10, both slightly bullish. So Trump and Xi historic meeting in Busan, South Korea. We could sign a trade deal today. It's all speculative and it's all based on promises, on hopes that things are going to finally find an agreement. But let's always remember that not because they want to meet up, shake hands for 1, 2, 5 minutes, people on poly market and betting even on that, which is ridiculous. I feel like they prefer to bet on something more certain than they actually shake hands rather than betting on whether they're going to get to an agreement, because literally they get to an agreement every 5 minutes, but they break it, they revert, they pretend they agreed. It's all politics full of crap. 7 out of 10 bullish. So let's see what is the most bullish thing of the past 24 hours. The ETF's C200 net inflows. Absolute bollocks, this thing. This is not bullish because we got yesterday fresh outflows of 470. That is very close to the highest since 13th of October, as you can see here in the screen. It's not doing a huge damage to this uptrend of cumulative flows. Fair enough, but again, after having very mild additions, getting a 470 looks a little bit spooky too. And it makes a lot of sense after what happened yesterday, in my opinion. So now we're gonna get in crypto Twitter, in social networks, tons of dudes that are geniuses because they knew this was gonna happen. They wait until something is bearish to start posting their bearish crap. As soon as things are back to bullish, they post their bullish crap. Everybody's a technical analyst. Everybody knows where the price is going. Yeah, sure. They can kiss my crystal. I'm not gonna say it. Anyways, Bitcoin could still hit 180K in November of 2029. If this was the next 4-year cycle, could you handle this? And Teddy is just preparing you for just repeating the previous performance and doing the same, hitting then the same trend line that we've been hitting for a few cycles in a row. Yoda says that Bitcoin is entering a do or die situation because we have the MACD monthly potentially confirming a MACD bearish cross. Can we undo it? Probably yes, but we need Bitcoin to jump all the way, make a quantic jump into 130K. At least that is where we can get a bullish cross on the stochastic RSI. So maybe this one can also get one at around 130, but we have just 1 day left to close October. And with the current price, it's pretty much guaranteed that we get it, unless in just 24 hours, everything changes dramatically. Bitcoin breached below the 200-day MA 4 times in the last 4 weeks. The 5th time could be a hard break, causing an accelerated dump to the 90K, 95K CME gap trendline support. So let's look at those levels. Let's look where is that liquidity sub 100K. That is the job that we need to do today, particularly because we are holding now a long enter at 111K. So we got a 20K gap that we need to assess where is it safer to DCA down if we need to. Remember, we don't have such an urgency because we are hedging with a short at 122K. Yes, in this channel, we know how to trade and we take a long with slightly more confidence at a level of daily support, which I'm going to show you later. There is a chance that today we hold daily support and we get out of the woods immediately and we can take early profits from the long. Just saying, we are prepared for any opportunities. We go up, we win. We go down, we win. Do we need to know then where are we going? No, we need to know when to take the profits. That's it. BTC has been trading above 100K for the past 6 months. A lot of leverage below 100K needs to be flushed out. We look into that liquidity, we will understand if this is an overstatement, if this is just something that you need to ignore. And again, every day we talk about the same thing. Every time there is a FOMC meeting, there is a drop. But here Alex Wasey is pointing out something that is actually fair enough. Every time we get that drop, it has been so far a shakeout, a bear trap. Because, yep, you do move 6% down from the day of the announcement of the FOMC, the cuts or not cuts or whatever, and then right after we have had new all-time highs. And there hasn't been a single exception in the past 3 times. So if this performs again, we might get another all-time high. Now, here's my take. This is the post. This is what is promising. Personally, I think that there is a chance that there is upside. I think there is a chance that we can go into 116 to 120 and liquidate those guys. But that could end up being just that. Basically, an overextended dead cat bounce into 120 and then no all-time high. I am prepared for that. That's why I'm keeping my stop loss in profit at 120.5, giving me just 2K of gap between my entry short and the take profit. We go beyond that, well, fair enough, I take profits and I continue then to rally with my long into an all-time high. I told you, we always win in this channel. And it's been more than a year. The more money we make in this channel, the less subscribers we get. Why is that? Because the people that subscribe this channel are the winners, and the winners are very little in the market. There has been tons of new subscribers that throw the towel after realizing that they just cannot handle making profits. They are desperately in need to go back to entertainment, easy pills, TikTok, crap, and losing money. Kila says Bitcoin has never had 6 green 6 months candles ever in history. We are on a candle 6, 3 years of up only. Fair enough, guys. We really need to look into that. I hear a lot of people saying this is a very disappointing cycle, and I completely disagree. It is disappointing for people that went all in on altcoins and that they assumed that we were going to have precisely what we have in 2021. Throughout the past 2 years, we've been saying that we need to adapt expectations when it comes to the altcoins. We've been on the lookout for an opportunity, but I have never, ever say anything that we need to go all in on altcoins. I've been always very transparent and very conservative, and I think I have played the right card on this cycle. Mostly Bitcoin, followed by Ethereum, and a few coins that I scale up in the bear market, and I ended up all of them closing in profits with the exception of 3 or 4 that are very small bags. It's all public, it's all in my previous videos. You can go and revisit any. Crypto Bullet says, reality check, we will need something extraordinary to break that resistance line on the MVRV Z-score. The Z-score is an on-chain metric and it's been in a decline. And people have been defending that we should break this, that it should be very easy, and that we should expect to close the cycle in the area of the red where we always close it. We have talked many times about the CBBI.info website that shows you a single number digit from 0 to 100 to where we are in the cycle. And every single cycle, we go from the lows of 1 into 99. It aggregates tons of indicators that are consisting of TA, moving averages, on-chain analytics. You can select individual ones and whatever. It's a great website if you want to keep an eye. But this cycle, we don't cross over 80. The maximum has been 83. And previous cycle, we ended the cycle at 97. Before that at 100. And before that again at 100. So there's been a decline of just 3 points. So ending at 83 is very low relative to the past ends of cycle. But we introduce a beast, we introduce institutions, and we really don't know what's going to be the final effect on this cycle of that. An early close, an early, not early in timing, but in terms of these indicators, closing the cycle while still slightly cool. 83 is pretty cool. We are already at 69. That's pretty nice. To be honest, I don't feel the stress of having to know whether we are finishing or not the cycle. My focus is always on my trading, is always on the win rate. Trader mindset doesn't look or chase certainties. It chases protecting capital. And in order to protect capital, you must indeed not think what's going to happen. Leave the door open to the cycle is ended, and at the same time, leave the door open to there is a little bit more to take. How you do that? Well, didn't I tell you I'm running a long and a short at the same time? Well, we can talk about that particular setup in depth in our workshop in just 1 hour. I'm looking forward to do that. This may upset you. Yes, because you don't have that mentality. You are thinking that you need to know. And in this case, overlapping as a fractal in here, this move down can send you back into 38K. Axel says the Fed's next move will depend on incoming employment and inflation data. Significant changes in these indicators over the next 2 months are unlikely, so I still expect a red cut in December despite the current rhetoric. However, since the market trades on expectations and the Fed's statements, heightened volatility should be expected, which is exactly what we've seen in the recent months. And then it's very conveniently showing something I want to show as well, which is the point of control we've been talking about on the 4 hour. That is located around 111K, and the price came back in here. And in my timely video I published for all members yesterday at 10 p.m. UK time, and it went live for everybody at around 3 a.m. UK time, so everybody can still watch it for free. But I talk about the dangers of this 4 hour point of control turning into resistance, the middle of the range, right there with the most volume. It's a hard thing to beat once you come down below, and we already hit 107, so coming from there back in there, there's a high risk that it turns into resistance. The daily at that point was holding pretty nicely. We need to look into the daily to understand if we are still holding the most bullish support. We took the CME gap, that is fully gone. We have 1 billion USD liquidated, and there is a legendary whale with 100% win rate so far, according to this dude, not according to me, I haven't checked, that went all in on BTC, Ethereum, and Sol. And again, who knows if it's all in? How do you know that it is an all in? Well, you got this portfolio, but he might have some additional margin in another account or whatever, so it might not be all in. That's an overstatement. And well, everybody's looking at this. What does he know? Because he entered apparently around the same price we did, actually slightly lower at 110, just 1K below it with a 10x, 13x. Personally, I went 3x, so my liquidation level is way lower than this dude. Let's see what questions we have from my community. Remember that you can always ask the questions in here. If you join my Patreon community, the link is in the description, and you can get either subscription to ask questions. Smiley, is it over? Simple answer. I don't know. And I'm not stressed about it. I don't care if it's finished or not. Textbook checkboxes are being checked by the day that we are done, okay? Every day, if we continue in this trajectory, if we lose 100K, every day we are confirming it more and more, up until a point where we could get to 99% chances that we finish. But I still think that there is like a 20% chances, 30% chances that we can put a new all-time high and surprise everybody. I continue to see spot dominant in this correction in here. We are still approaching a November, which is supposed to be the most bullish month. So why am I not saying there is an 80% chances? Well, because we are in the middle of a move up on the S&P and Nasdaq that is looking like a bubble is about to pop. I have no clue when is it gonna pop, if it's gonna be precisely in November or in Q1, Q2 2026, no idea. But if it pops, it drags crypto back down and it's the end of the cycle, period. Eric, it will be nice to know the main reason behind the current fragility of BTC price. Selling pressure from long-term holders or continuous deleverage? Any chance the whales are positioning after the FOMC? We've seen some distribution of long-term holders, big wallets. I've seen some information that I captured from crypto Twitter. I don't remember the account, but they were, I think it was Glassnode that was saying that long-term holders and large whales are distributing into other new whales, are taking those coins and replacing them. Of course, partially, some of that distribution is still going into short-term holders, don't get me wrong. But I think at the moment, the timing of the end of the cycle has been hit precisely, with that 126K happen in the same day as in the past two cycles. And that is spooking the market together with all these events. If we get now that Trump talks to Xi and they don't agree something, that's going to add into the fire. And there's nothing worse than starting a week with all the bullish expectations on top of the table, everybody going long, and then they rug pull all this bullish stimulus and they turn them into the worst nightmare bearish things. Textbook Trump setup. We got it all cycle. 3 years, not 3 years because he hasn't been 3 years in the management, but you get the point. Even before he officially started as a president, every pump that was related to Trump saying something to crypto, something related that something is amazing, every single one dumped harder than it pumped. And yeah, he supports crypto and I appreciate it. That's great. It's been great, but I trade it with that pinch of salt every time. And that's why I'm still here not saying, oh, I have 80% win rate, or I have 70. No, 100%. And you can only get that but by not trusting, starting with politicians. Morning, what is the exit plan for the long? Appreciate your short hedges, but for us who aren't in the short, yes, and I do appreciate that, SK, and that's the right mindset. And I'm starting to talk like ChatGPT. Maybe I'm listening too much to it. But yeah, that's the right mindset, and we need to look into potentially how to exit from that long. Not to mention that I should have probably say that if you don't have the short, scale down your long because you're less protected, obviously. We'll look into exit prices later. Lara says, why do we keep stopping just before the huge fair value gap? What's missing? And I think there is conviction. And if you look at the order book yesterday, you're going to notice that there was a huge amount of resistance right as we approached the FOMC, but a huge, every single deviation had more ask than bid. Siri says, QT ending confirmed in December 1st. Rate cuts not confirmed in December 8th meeting. Normal 4-year cycle should end by December. CBBI score is at 69. Now, shall we consider November as another choppy month and shift our hopes to December now? Potentially, as long as you don't trade it thinking that there is a certainty of that. Just leave the door open for that by trailing along into it, by preparing for a lower low for that long, by cherry picking like a surgeon what's going to be your next DCA order. When people say DCA across YouTube, they just tell you DCA, that's a key. No. DCA can be the final nail in your coffin, okay? DCA is every time that you're putting a new DCA order, you're making your death more certain, okay? You get wrecked more easily by putting DCA if you put them wrong. This is a tool, right? When you think about DCA, think about playing with fire. You're preparing a barbecue in Argentina. Imagine you're an Argentinian. Write down how it feels in the comments. But you're preparing that massive piece of meat that we get in Argentina and no one else gets, maybe in Australia or in US if you still have some cash. But in Argentina, people, cook big steaks and you put the wood fire right there. If you don't distribute properly the wood fire under the steak, and if you don't give the right temperature, which you can measure with your hand right above the fire, and if you can count how many seconds you can contain the hand, and you say 3 or 5, well, then you know what's the temperature, and then you can place the meat and roll it over and over. We're doing the same thing with the price. We need to place our DCA orders at the right temperature, the right distance, considering how much price can expand on 4-hour, daily, weekly, monthly, and the timing and all of that, reducing our risks. That is what we need to talk about in the workshop as well. If you join the workshop, remind me to talk about that. That's very important. What do you make of Cerberus buy signal? Remember that the buy signal on Cerberus that we print right before we enter the bear market in the past cycle, it triggered buy, but it triggered 2 buys that average down into around 40K, giving you the 48K dead cat bounce exit, okay? So if you took both signals in here, this one at 47, and then at the lows here you can take 36, then you get around 40K, 42K, around this average, and you get this exit. You get a warning sell there where you are already overextended in the timing in the cycle. You already know that relative to previous cycles, this is again too late to go back above 100K and start doing 150K like tech debt and all the other losers told you. We were already selling 69. People already in my community had an article in their email that I am selling at 69. But this stupid dude ended up selling only half of Bitcoin and not all of it. But many people that sold here, they ended up even inviting me to their new house. They bought houses with that. I bought cars with that. So anyways, this video is really going to end up too long. I think the Cerberus signals can give you a good entry, but it needs to be treated like any other signal. It can fail. So far, if you interpret it properly, you should be getting a decent exit. And look at this. People are looking into the charts today, although there seems to be a little issue right here. Oh no, it's working actually. No issues. Everything is working. False alarm. You can see all my charts live from Telegram just by joining my Telegram group. Now, if you want unlimited charts, if you are heavy user, then of course you can take advantage of the 40%, get a full year, and you get the full year, all my charts all the time in any of your devices via Telegram. No need to get TradingView account with that one. Look at this. We closed the full CME gap and we went slightly below it. Not what we did last week. We pinched twice and we started putting new highs. We are in the negative 269 in October and we have 1 day to revert that. We do not have an example here of a green September and red October. So if we close like this, that is really unsettling because we reverted the role of the months. Just like I told you, we have only 50% of following past performance seasonality patterns this cycle. We kind of reverted half of them. So you cannot really rely on these things, October and September being a massacre. Look at this, green, greener, green, greener, green, greener, green, greener. We don't have any green that even went below the previous green. So from 5% to 4%, we don't have that in history. We don't have green to red either up until 2013. If we had it before, that is too early. Bitcoin was just doing nonsense before. Fair enough. On the 4 hour, we have the breakdown. We are tracking it. We are looking for an area to break out on the 4 hour now. The 4 hour should be the first one that should break out. Daily is in the process of potentially losing the most bullish support. We need to look into that. And we hit last night the first support on the CPR. We have two leftover CME, but they are both of these gaps below 100K now. And the two harmonic patterns that we have followed in the 4 hour in the recent price action have played out perfectly. Actually, one was on the daily, this one in here, that was bearish. And although it went slightly higher, kind of invalidating it, it still came back down. And this one is the ABCD that has now achieved more than the golden pocket. It already hit the B wave and it went beyond the golden pocket, now potentially even getting into the C level, which is the most aggressive target along with the A level. So let's look at the 4 hour. We are kind of going sideways in this area. I am not liking the shape of this because it's completing another head and shoulder with a target probably around 100K. But we got coming in the global support on the RSI 4 hour that is at around 101 in confluence with the target of the head and shoulder. Let me draw this ugly head and shoulder. Is not perfect. It never is. But if we don't cross beyond 111.5 and we come back down in here, which we have already done, if we break below this, which we could do in this current candle in the next 35 minutes, since we already pinch, we already produce a recipe for a liquidity hand to the downside. So if we come back here, if we come back into 108, why are we going there? That could be because price wants to take liquidity even lower than that, even lower than 107. So let's protect as much as we can 109.6 on the 4 hour candle close. If we can protect that, we could potentially put a double bottom in here and get a very early low quality breakout and a potential dead cat bounce revenge rally into the area of RSI 68. Let's put that here. So first the breakout, which is at 45.39, and then the 68.24. Those are the ranges that we need to be looking into. Let's go into the price action in here. And now we know, let's go beyond 111.5 on the RSI. Let's reclaim all this. Let's just leave another week to the downside to show that there is appetite to go higher. By doing so, we have a full range to explore into 118.6. That will be fantastic if we get a rally on a Friday. Sometimes we get some rallies, so why not, being speculative there. If that fails, if the rejection starts coming back in here into 109 and beyond, why are we going there? We already took that liquidity up until 108. That hints that market maker still wants to make some more damage, in which case we have next an already deteriorated bull order block there. So maybe we cut it like butter with a warm knife, and maybe we go into the bottom of the range and we hit 106. Global support on the 4 hour is currently at 101, and the top of the range on the 4 hour is 135. That comes from hitting 85 on the RSI. Notice how the volatility peaked and very quickly came back down. So if we come back here into -11, let's keep an eye on that. If you are on Telegram and checking my charts and you see that that is happening, happy to get a ping from you on Patreon or on Telegram to let me know so I can check at the charts over the weekend. So on the daily, look at this. Let me magnify it so you can see what we are talking about. So we can see that we hit that support there on the daily, and you can see then that we pinch it slightly. So from 45 probably we went into 44.62. So that is less than 1 point of pinching. This is something that can be recovered as long as we manage to do something like that. And then you can say, okay, I didn't see anything. That wasn't a breakdown. That's fine. But if this guy closes below the yellow line in the next day, like today, Thursday, by the way, typically Fridays, we have been having some rallies, so I don't want to confuse you. Today is Thursday. So if we get this to close like that, then we can say, okay, yeah, that was a breakdown. Now it's confirmed. Now, if this accelerates, it can get to the global support at 35. Let me see if it's properly placed. I think it needs to be slightly higher, but yeah, still is at 35. And the global support is 26.52. The global resistance is 83. So let's look at that on the daily. We are now slightly below that support. Support means that the daily needs to close above 110.355. Currently, we are at 109.989, so slightly below. $300 more, we reclaim daily. And if we reclaim daily, maybe we can get some upside. But we are already below, closing the daily below the neckline. So that was a bit of a pain. We closed below the neckline, and we did appears very, very fractional on the most bullish support. That is hinting that the daily is having some initial pain. Not the biggest, just some initial. This can also be recovered. We could be heading into a bear cross on the MACD, but this is recoverable. Just push above 111, and then the mouth is going to start opening again, and it's not going to look like it's heading towards a bearish cross. Right, CPR held the first support. We haven't touched again the second one, which is at 102, neither the 97. We are about to end the month, and we continue to just sideways around the 114. You see, that area there on the daily is the area that we need to stay above it to be bullish, and we are just going sideways. We're going to get another CPR level tomorrow. Sorry, on Saturday is the 1st. So tomorrow is still October, November. We're going to get some CPR levels around here. Since the range has been the widest of the past months, this is a range of $24,000 in a single month. That's a big range, so maybe we're gonna get wider CPR levels, and that is gonna magnify what levels we need to be on the lookout. So November is gonna bring potentially some reward for shorts or longs, yeah? But our risk management is going to have to adapt to that, because if the CPR levels are like this, and I come and tell you, look, you need to protect from 72 into 156. If you are long or short, whatever you are, you're going to enter somewhere here, and you need to be protected to that, and to that, that is a big range. We still don't have it. I don't know how wide it's going to be, but do not miss the video on Saturday once we get the final reading. Or use the Telegram charts. Why not? You can see that is value for free. The head and shoulder seems to be getting rejected from this retest. It's 3 weeks. One down, breakdown, confirm. Yes. Retest going on, couldn't hold above 115 point something. No, it couldn't. This week is being rejected. So we have up until tomorrow to put a green candle. And that requires the price of Bitcoin to move up at least 8 to 9% in a single day. If we can do that, we can reclaim this, and we can repeat the previous performance, which has been head and shoulders, double tops, bearish patterns on the weekly, fake out half. They give 1/3 to 1/2 of the technical target, and then they come back up. They trap bears. So if we are going to trap bears, we have 1 day to come back up. Otherwise, we confirm, sorry, not 1 day, until Sunday we have to do this. If we get a pump on Sunday, we can still recover. Yeah, sure. I'm talking bollocks. Remember, Sunday is where we close this candle. I was thinking the close of the month. Bull market support band is being played with. We need to keep an eye for 102.7, which is the level that has held us support all this cycle. And we need to be prepared potentially for breaking that, staying below and turning it into resistance. That means maybe going into half 70s and then coming back into 100K for a rejection. Do not be scared of thinking at these times monthly and weekly timeframes. It is not something that you should fear. It's something that you should embrace and be prepared for. It is a must. It's mandatory for you to keep gains. If you don't think weekly and monthly and you are in profit, you are a future big loser. The monthly is currently being tested. We are precisely at monthly support. Think about like being in here before breaking below and then doing a dead cat bounce, moving back into 69. That cycle, the breakdown happened in April 2021. Think about April 2025. What were we doing there? Well, we were breaking down from here and we had a move up into September, October. So we are kind of here already, but we are still at support. Whereas in here, we broke down and did that later. Takeaway, let's be mindful of breaking down that monthly support, and whatever happens by the end of the month, if we held support, it's going to be potentially something positive, something that we can move slightly up, maybe into that resistance on the monthly, which is 152. Are we going to repeat the past performance and hit 77 so late in the cycle? I don't know. In 2017, we did it in December, but last cycle, we did it in February, like almost a year ago. And something odd is that the oscillator of future is still showing that we are in a high level of 9. That is not great for looking for longs. I'm entering in a long at an area where we still have a huge amount of open interest accumulated from longs. So there is a chance that I need the second DCA order if we don't go for the 117 straight away. We are back in fear at 34, and let's see how that short term closer liquidity is looking like. It's piling up more and more, as I can see, located at 116.4. Let's see if we can take it. But if people continue to dump, even if there is not much liquidity around here, we could be heading into 100K. Now, looking at this from the distance, we got all these levels to deal with that are becoming attractive just because we are hearing things that are spooking the markets, the Nasdaq, the S&P, and therefore crypto. But really, we have a big liquidity at 130. Can we leave it behind and enter the bear market? I think we can. Okay, there is a chance that we don't go for that, and I'm prepared to take profits even if we don't go there. Now that this 90K is becoming very heavy, do not ignore it. Keep an eye on it. And on the 30-day, keep an eye on 107. Now is the largest liquidation that could bring the price there. Will I be averaging down at 107 if I enter at 111? No, unfortunately not. It's too close. I prefer to do it at least 10K away or around those numbers. Now I need to flip to Chrome because somehow Market Monkey terminal doesn't work here on Comet. So let me see how the order book is looking on Binance. We have 3K of resistance, not letting people go back above 110. They are right there with the wall. It's not the biggest wall, of course, but it's, somehow decently sized, and is placed right there at the point of control, slightly below it, kind of stating, hey, you're not going to get back up from here. We have had that before, and sometimes we get it done as long as we have the right incentive. Some good news. CBD still aggressive sellers. Longs are not really coming back big like before, where we have 10K, now we have minus 12K. Shorts are neither acting that much in here. Some new shorts, but not many, not that pronounced as here. I think both sides have been decimated. Open interest shows that that is the case. It just stays flat. If we go into fire charts, we can see here that there is a lot of resistance still since yesterday. They started placing it from 116 to 130. Most of the liquidity is there, but there is some support, I will say, around the 100K at the moment. Let's look at that in the monthly. You can see it in here, 33 million, and at 104.85, there is also some millions, 28 million. But on the top, we are talking about resistance of 38 plus 39 plus 54 plus 37 plus 44. All of that is in the way at the moment to not allow to put a new all-time highs. And purple whales remain just silent. They haven't closed the position, but they haven't increased either. Brown whales continue to push up as the price comes down. Longs are increasing and now they are at levels of 70. So if you want some hopium, that is one of the only signals I have today to say maybe that can coincide or is about to coincide with a local bottom. The last two times were at 105. In here, there was another bottom at 107. So maybe if those longs persist and they don't rug pull, that could be a a bottom formation. But we have all this resistance. Look at this. The order book is just stinking of bears. All deviations. Minus 23, minus 17, minus 33, 16, 13, and 34. What the hell is this? Even 20% and beyond is full of sell orders. Everybody is expecting this to be the top at the moment and to trade it like that, or it is massive manipulation. We got now shorts 500K, and that is a second one more bullish alpha I have to share. 500K is decent amount of liquidity right above us. Let's see what that is in terms of open interest. We have in here that open interest that was at 111 and is still there. Now it took shorts. Crazy, but they flip all these longs that were here to push the price into 116, and now they flip it into shorts. So with all this open interest, maybe they can bring back the price down there, but they just opened 590 million orders there of shorts and another 500 and another 610 million. So that is almost 1.2 billion in shorts entering at 111. That means that if we come back down in here, that is a heavy level that could attract the price back into here. That is a reassurance if I take a second order for potentially coming back into that level. The fair value gaps that we are living in here are pretty juicy, not to mention that we didn't even try to get into the 120, so that is still standing there. Unfortunately, market maker really to take this fat one, it needs to go beyond the golden pocket and make it look like a V recovery. So I'm not sure what the market maker is going to want to do after all this sideways, if it's going to want to go and hit 97, 95 or even lower before coming in here, or leaving it there for 4 years. That is the biggest nightmare for the longs, but anything is possible really. Thanks so much, guys. I'm not going to be able to do the summary, but you know, I did a summary last night and it still stands. I took a long, I had the hedge, and I'm looking to DCA down, but I'm not going to leave any limit order at any specific price. I will let you know if I take an order. Candidates are, you know, low 100Ks and sub 100Ks around 95K, where we see, you know, this liquidity in here, 95, looks pretty decent. If I take something at 103, it seems very close to 95, but well, I'll have to make my mind at some point and see if we still have all that resistance at that point. All of that needs to be processed in here before I decide. Thanks so much for watching. I'll see you in the next one. Take care. Bye-bye.